Hello everyone, welcome back to my YouTube channel. My name is Ayu Endalestari, you can call me Ayu. I am a student of Mercubuana University majoring in accounting. In this video, I will explain about bookkeeping and generally accepted accounting principle or GAAP. Okay, let's go straight to the video. Happy watching! Running a business, many considerations need to be made in terms of finance, one of which is bookkeeping and accounting. To the layman, bookkeeping and accounting sound like the same thing, but are true activities related to the financial flow of a business or company. Although bookkeeping and accounting both deal with business or corporate finance, they have differences that should not be overlooked. Bookkeeping is the process of recording daily cash flow, while accounting is the process of processing bookkeeping record to take further action. What is the meaning of bookkeeping more broadly? Bookkeeping is the process of recording daily financial activities that occur in a business or company. In simple terms, bookkeeping is at the forefront of the company's financial processing. Bookkeeping also plays a role in making simple financial reports such as cash flow statement, income statement, and balance sheet. Then, activities included in bookkeeping are process of recording and managing petty cash flow, the process of recording and storing invoices payable and receivable, the process of recording employee salary costs, process of recording bank reconciliation, the process of making financial reports such as cash flow statement, income statement, and balance sheet. Then, what about the meaning of the accounting? Like bookkeeping, accounting is also the process of recording the cash flow of a business or company. It can be said that bookkeeping is a part of accounting. The function of accounting is to present financial statement fairly and correctly to those concerned to make the necessary financial decision. Activities included in accounting are recording of financial flows, produce financial reports, financial audit, strategic planning, tax reporting, and performance optimization. What is the difference between bookkeeper and accountant? In the world of bookkeeping and accounting, the terms bookkeeper and accountant are known. Bookkeeper is the person in charge of doing bookkeeping. The thing that a bookkeeper must have is accuracy. This accuracy is important for bookkeeper because the bookkeeper is in charge of making records that do not allow errors. The minimum level of education that a bookkeeper must have is a high school or vocational high school graduate with a minimum of 2 years of work experience in a related field. This is different from the accountant who must at least have a bachelor degree in accounting or a bachelor degree in economics and take several training and qualification tests. The task of an accountant is more complex because in addition to doing bookkeeping or recording, an accountant must also be able to make decisions related to finance. An accountant is required to have accuracy like a bookkeeper, coupled with ability to formulate a strategic vision and financial decision. Regarding the selection of bookkeeping and accounting, companies need bookkeeping service if the company only requires recording cash flow such as cash receipt and cash received in a real time. Bookkeeping services are also considered sufficient if the company only needs simple financial reports that include cash flow statement, income statement, and balance sheet. On the other hand, the company needs accounting service if the company wants more complex financial reports and requires advice on financial decisions that the company must take. These suggestions include determining the price of goods, employee salaries, advice on company expansion, advice on tax management, and others. Financial reports generated from the accounting process will undergo an audit stage. An audit of financial statement is necessary because there is a potential conflict between information providers and information users. Information has very important economic consequences for business makers. Expertise often requires information to be presented, and verified users often prevented from having a direct relationship with the information. In conducting the audit, it must comply with the established auditing standards. Auditing standard consists of three important standards, namely, the first, general standard. The audit is carried out by someone who has sufficient quality and technical training as an auditor. An auditor must also be neutral and independent, have a good level of accuracy and prudence in carrying out audits and making reports. The reports produced must comply with auditing standard or GAAP. Second, standard of fieldwork. In carrying out of audit, it must be carried out properly, therefore careful planning is needed. If there are junior officers, audit supervision must be carried out. An adequate understanding of the company's internal control is necessary to determine the nature of the time and determine the depth of the audit. Sufficient competent audit evidence is very much needed in the examination. Third, standard of reporting. Statement of audit report presented must comply with generally accepted accounting principle or GAAP. If the accounting standard used in inconsistent, the cause and effect must be stated, and the effect of the company must be stated. Disclosure the audit reports is in the form of an opinion, and there must be complete information or disclosure. Understanding generally accepted accounting principle or GAAP. GAAP is a combination of authoritative standard or set by policy boards and the commonly accepted ways of recording and reporting accounting information. GAAP aims to improve the clarity, consistency, and comparability of the communication of financial information. GAAP may be contrasted with pro forma accounting, which is a non-GAAP financial reporting method. Internationally, the equivalent to GAAP in the US is referred to as International Financial Reporting Standard or IFRS. IFRS is currently used in 166 jurisdictions. GAAP helps govern through the world of accounting according to general rules and guidelines. It attempts to standardize and regulate the definition, assumption, and methods used in accounting across all industries. GAAP covers such topics as revenue recognition, balance sheet classification, and materiality. The ultimate goal of GAAP is to ensure a company's financial statements are complete, consistent, and comparable. This makes it easier for investors to analyze and extract useful information from the company's financial statement, including trend data over a period of time. It also facilitates the comparison of financial information across different companies. Special considerations. GAAP is only a set of standards. Although these principles work to improve the transparency in financial statements, they do not provide any guarantee that a company's financial statements are free from errors and omissions that are intended to mislead investors. There is plenty of room within GAAP for unscrupulous accountants to distort figures. So even when a company uses GAAP, you still need to scrutinize its financial statement. Where are generally accepted accounting principles or GAAP used? GAAP is a set of procedures and guidelines used by companies to prepare their financial statement and other accounting disclosure. The standards are prepared by the Financial Accounting Standard Board or FASB, which is an independent non-profit organization. The purpose of GAAP standard is to help ensure that the financial information provided to investor and regulators is accurate, reliable, and consistent with one another. Why is GAAP is important? GAAP is important because it helps maintain trust in the financial markets. If not for GAAP, investors would be more reluctant to trust the information presented to them by companies because they would have less confidence in its integrity. Without that trust, we might see fewer transactions, potentially leading to higher transaction costs and a less robust economy. GAAP also helps investors analyze companies by making it easier to perform apples-to-apples comparison between one company and another.